Welcome back to HustleWise UK. If you're watching this, you're already ahead of 90% of the population because you care about where your money lives. But in 2026, simply saving is a dangerous game. We are currently in a financial landscape where the Bank of England base rate is sitting at 3.75%, and while inflation is cooling to 3.2%, your bank is still trying to play you. The death of the passive saver. For years, we didn't have to worry about the tax man because interest rates were so low that nobody was making enough interest to trigger a tax bill. But things have changed. If you have £15,000 sitting in a standard high-yield savings account today, you are likely a target for HMRC. The Personal Savings Allowance, PSA, explained. Let's break down the rules for 2026. Basic rate taxpayers. You can earn £1,000 in interest tax-free. Higher rate taxpayers, you only get £500. Additional rate, you get £0. The frozen thresholds till 2028 mean more of you are being pushed into the 40% tax bracket. If you're a higher rate taxpayer with just £12,000 in a 4.5% account, you've already hit your limit. Every pound of interest after that, HMRC takes 40p. At HustleWise UK, we believe that 40p belongs in your pocket, not the government's. This part of the video is about plugging that leak. Now, let's talk about your secret weapon, the Individual Savings Account, ISA. This is not just an account, it's a legal tax-free wrapper. The £20,000 annual gift. Every year, the government gives you a £20,000 limit. Inside this, you pay zero income tax and zero capital gains tax. But here is the massive 2026 update you need to know, the April 2027 reform. The 2027 cash ISA cap. The government has announced that from April 2027, the cash ISA limit for those under 65 will be slashed to £12,000. The remaining £8,000 must go into stocks and shares, or other ISAs. HustleWise strategy. 2026 over 27 is your last chance to move a full £20,000 into a cash ISA if you prefer safety over market risk. After this year, the door partially closes. The different flavors of ISA. Cash ISA. The 2026 market leaders like Marcus or Starling are offering around 4 to 4.5%. It's safe, but is it the best? Stocks and shares ISA. This is where wealth is built. We'll compare Vanguard now with a £4 month minimum fee versus the zero fee. Trading 212 later in the video. Innovative Finance ISA. Peer-to-peer lending. High risk, high reward. Lifetime ISA. The cheat code for under 40s. If you are between 18 and 39 and you aren't using a LISA, you are making a massive mistake. For every £4,000 you contribute, the government adds £1,000 for free. The first home goal. In 2026, house prices in the UK, especially in London and the SE, are still a challenge. The LISA allows you to buy a home up to £450,000. The catch. If you withdraw for anything other than a first home or retirement, age 60 plus, you pay a 25% penalty. This means you lose the government bonus, plus a bit of your own money. Consultation update. There is talk in Parliament about replacing the LISA with a first-time buyer-only product by 2028. If you have an existing LISA, keep it. You'll likely be grandfathered in with the old, better rules. At HustleWise UK, we suggest maxing this out first if you don't own a home. That £1,000 bonus is an instant 25% return. You won't find that in any savings account or stock market index, guaranteed. Where you hold your money is just as important as the account type. In 2026, the fee war is brutal. Vanguard UK. They used to be the king of low-cost investing. But since January 2025, they introduced a £48 annual minimum fee. The HustleWise verdict. If your portfolio is under £32,000, Vanguard is now one of the most expensive platforms. If you have £100,000 plus, their 0.15% cap makes them very attractive. Trading 212. Zero platform fees. Zero commission. They pay 5.2% interest on uninvested cash. In 2026. The catch. They use Euroclear for transfers, which can make moving your ISA out to a traditional broker like Hargreaves Lansdowne a nightmare. Moneybox. The entry-level king. They charge a £1 monthly sub plus 0.45% fee. Why use them? Their Roundup feature is the best in the UK for people who struggle to save. It turns your spare change into an investment empire. But once you hit £10K, the fees start to bite. So, HustleWise UK family, what is the play for 2026? The tiered strategy. Tier 1. The bedrock. £3,000 in an instant access savings account. For example, Marcus. Accessibility is greater than tax. Tier 2. The house. £4,000 in a lifetime ISA, cash or S&S, depending on your timeline. Tier 3. The Freedom Fund. The remaining £13,000 of your allowance into a stocks and shares ISA Global, all-cap index. Conclusion. Money is a tool. If you leave it in a standard savings account, the taxman is your silent business partner taking 40% of your profits. By using ISAs, you fire that partner. If you want my HustleWise UK 2026 fee comparison spreadsheet, comment WISE below. Like this video, subscribe to the channel, and remember, don't just work for your money, make your money work for you. I'm your host, and this is HustleWise UK. Keep hustling.